Good morning. You're watching Market Cafe on ET Now with me, Shreyansi Singh and Kanishka Sarkar. And over the next 1 hour, we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. And speaking of stocks then, Kanishka, let's take stock of what the handover is as far as Wall Street is concerned. Overall, a losing day is what we're looking at.
That's correct. Good morning, Shreyansi. Well, the US market does seem to bounce back, but it seems it's unable to hold on to its gains. The S&P 500 slipped yesterday as uncertainty around the US economy continued to weigh on the equities, thwarting the market's attempts to move recovery from a month-long rout. The broad market index pulled back 0.2%. The Nasdaq Composite slid 0.3%, weighed down by losses in Apple and Alphabet. The Dow Jones Industrial Average was down 0.03%. Elsewhere, the IT giant Accenture was in focus. Its shares tumbled more than 7% after the consulting firm revealed in its second quarter earnings call that its Federal Services business has lost contracts with the federal government amid tighter spending efforts under the Trump administration. In terms of earnings, Accenture only raised the lower end of its guidance band, now expecting annual revenue growth between 5% to 7%. Now, this is in comparison to the prior forecast of 4 to 7%. Now, in response to these Accenture shares falling 7%, the US-listed shares of Indian companies, that is ADRs, like Infosys and Wipro, also fell as much as 4% in regular trading. Remember, Accenture's results generally serve as a broad indicator of potential outcome for India's IT sector. Also remember, these moves on the Wall Street come just a day after the latest Federal Reserve meeting, in which the central bank forecast 2 interest rate cuts in 2025 and left the rates unchanged for now. Fed Chair Jerome Powell also pointed to tariffs as a source of concern, especially among consumers, which could put pressure on the economy. Moving on, looks like oil prices also settled higher yesterday. What are you picking up on the crude check front?
Well, absolutely. Let's take a look at just that. But before we do that, let's also take a look at the weekly moves coming in as far as the Wall Street is concerned. The S&P 500, of course, on pace for a 0.4% advance on a week-to-date basis. About to break a 4-week losing streak as far as the S&P 500 is concerned. The Dow, of course, on track for a 1.1% gain, marking its best weekly performance since late January as well. And the Nasdaq as well is off about 0.4% in the period as well, heading for its 5th straight losing week and its longest stretch of weekly losses coming in since May 2022. So that's a quick check going as far as the weekly moves are concerned, as you can see on your screens as well. But let's move on, take a look at oil prices, because they also rose on Thursday after the United States issued new Iran-related sanctions. Renewed tensions in the Middle East is also something that we're looking at, countering the strength in the dollar at this point. So those are all the factors that are currently at play when it comes to oil prices. Brent crude futures gained just about 1.7%, closed above that $72 a barrel mark. So very important level coming in as far as Brent is concerned. When you take a look at the US WTI as well, you do have that contract for April that is expiring on Thursday, rose just about $1 thereabout. $68 a barrel is the kind of level that you're looking at as far as US WTI is also concerned. Now, in terms of key recent news and updates, you do have the US that issued new Iran-related sanctions targeting entities, including for the first time a Chinese teapot or independent refinery and vessels that supplied crude oil to such processing plants. You do also have US crude oil inventories. That is something we've been watching out for in terms of key data, rising 1.7 million barrels, however, exceeding expectations for an increase of 512,000 barrels in an earlier poll as well. Putting a lid on crude prices, like I mentioned earlier, was the dollar. So the greenback inched up just a tad bit, and on the back of that, you have a little bit of pressure that we've seen being put on crude prices. But regardless, you do have Brent sustaining that $72 a barrel level. So it's a very important level, Kanishka, as far as oil prices are concerned.
Correct. Now, moving on, we have some important cues to watch out for today. Back home in India, FTSE rejig is due today. In the Eurozone, consumer confidence index will be out today. That's something to be that we should be watching out for. In terms of corporate action, the L&T board is to mull the fundraising via debt issue. In other events around the world, New York Fed President John Williams is to speak today.
Then moving on, those are the events that you're watching out for. But let's get tracking the top headlines this hour. Then US President Donald Trump has signed an executive order to boost domestic production of critical minerals, which includes the likes of uranium, copper, potash, gold and possibly coal. This move also comes as part of a broad effort to offset China's near total control of the sector. Meanwhile, the order also directs federal agencies to expedite the review of mineral projects, prioritize mineral production as well over other projects on federal lands as well. Remember that the boost will be led by the Use of Defense Production Act as well.
Some more on the US updates front. On the macro front, US reported its home sales data, which has risen in February at 4.2% from January to 4.26 million units on a seasonally adjusted annualized basis. Although home sales were 1.2% lower compared to February on a yearly basis, easing mortgages rates and more properties on the market have been encouraging for home shoppers. Meanwhile, the median price for an existing home in February was at $398,400, which was at the record high for the month.
Alright, then moving on, once again, Tesla is back in news as Morgan Stanley analyst Adam Jonas has trimmed his price target on Tesla shares, citing weak auto deliveries. Jonas, in fact, reduced his target to $410 from $430 per share. Jonas also indicated that investor sentiment has shifted, with some anticipating a year-over-year decline in deliveries exceeding 10%, which is a stark contrast to the more bullish outlook from January. Now, this sentiment shift aligns with Tesla's challenging year-to-date performance as well.
Next up, Accenture, like I said, has beat revenue estimates in Q2 earnings. The IT major has also raised the lower end of its annual top-line forecast. My colleague Ansh joins in with more details.
Well, Accenture delivers a steady performance in Q2 of FY25. If we talk about revenue, then that stood at $16.6 billion, growing by 5% in dollar terms, whereas 8.5% in local currency terms. Now, this was slightly better than the estimate. If we talk about margins, then operating margin expanded by 50 basis points to 13.5% on year-on-year basis, while EPS, that rose by 7% to $2.82. Talking about bookings, we are seeing that new bookings came in at $20.9 billion, and this includes $1.4 billion worth of Gen AI deal, highlighting that strong traction is coming in this space. Now, if we talk about outlook for FY25, then Accenture has narrowed its revenue growth guidance to a range of 5 to 7% in local currency, upgrading the lower end of its forecast, which is a very positive sign. If we talk about margins, then we are seeing that they have given margin expectation between 15.6 to 15.7%, with EPS guidance set at $12.55 to $12.79. Lastly, on earnings call, management said that macroeconomic uncertainty persists, but management remain confident in achieving the FY25 targets.
Alright, then a good quarter coming in as far as Accenture is concerned, and even the forecast is pretty good. It looks like robust growth is on the horizon when it comes to this particular company, but it's time for a very quick break. As far as Market Cafe is concerned, we'll see you on the other side with some more news and updates. Welcome back. Thank you so much for staying tuned in. Well, let's get your check going as far as the Asian markets are concerned. Firstly, let's take a look at Nikkei, because that is the one that's up 0.5%. As you can see on your screens as well, you do have Japan's headline inflation that rose 3.7% year-on-year in February, easing from a two-year high of 4% that was seen in January. So that's an update coming in on the macroeconomic front. As far as Japan is concerned, ASX 200, that's the one that, as you can see on your screens, is up just about 0.3%. Shanghai as well holding on to a tinge of green at this point. Uptick of just about 0.1% coming in as far as Shanghai is concerned. Let's also take a look at Kospi, because that's down 0.6% as you can see on your screens as well. And Hang Seng also holding on to a tinge of red at this point, 0.4% downtick for Hang Seng. So largely nothing to write home about, nothing to complain about. As far as the handover is concerned for the Asian markets, Nifty of course shut shop around 23,190 levels, and currently what is being penciled in is a rather muted start, not much of an uptick in terms of points that we're looking at as far as the spot basis is concerned, but you do have a decent handover as far as Asia is concerned, and from the US, not a very good handover. So let's see how that really pans out for us, Kanishka.
Well, it's now time for some updates on the domestic front. In a big push for metals business in India, Kumar Mangalam Birla has unveiled a 45,000 crore rupees investment plan for Hindalco's copper and aluminium segments. The company will also develop solutions for EVs, defense and the aerospace sectors. Now listen in to what he had to say on this.
Hindalco is engineering the future as opposed to just being a metal supplier. For many years, Hindalco has been making many innovative products which make us come closer to the customer, and therefore we're talking about becoming a solution provider and therefore help engineer the future.
Rather than moving on the sidelines of the same event, we also had an exclusive interaction with Satish Pai, MD Hindalco, on how they plan to use the 45,000 crore rupees capex. Let's go across and listen in to what he had to say.
We're going more value added, more downstream, more high tech. And I think that's why this branding opportunity is to signal that new direction of Hindalco. So that's the first part. We have also announced a pretty heavy capex program of 45,000 crores that our chairman spoke about. And really this is because we believe in the growth story of India. And on the other hand, we also believe that our strength of our balance sheet, we are net debt EBITDA negative now, allows us to make that investment. So where are we going to spend this? We are going to spend it on a new alumina refinery in Kansariguda that just broke ground. We have announced 180 KT aluminium smelter expansion in Aditya. We have also broken ground on a 50 KT copper recycling and e-waste recycling plant. And we are also going to soon announce a copper smelter expansion in Dahej. So these are the large 4 upstream projects. So besides this, we are also working on aluminium foil for the lithium-ion battery, copper foil for the lithium-ion battery, white fused alumina for the steel industry. So quite a lot of downstream projects as well in this 45,000 crores.
Right. And how are you looking to fund this 45,000 crore? How much would that be debt and how much would that be capital from the parent? So what is the plan there?
So I think Hindalco is net debt negative. So currently our plans for this 45,000 crores is to largely use internal accruals. So we are generating enough cash to fund these projects. I mean, even if we have to, at a certain stage for cash flow purposes, borrow a little bit, we still commit that our net debt to EBITDA will never cross 1. So we are quite comfortable to fund these projects.
Sure. Tell us more about the alumina and the copper business. Now, right now, the capacity for the alumina business, I guess it's 4.7 million tons.
Yeah.
Yeah. And copper
3.7.
3.7. Yeah, sorry. And copper also
we sell about 500 KT of refined copper.
So going ahead, what are the goals for?
So in copper is very simple. In the next 3 to 4 years, we want to be able to be selling 1 million tons of refined copper, right. Both from the smelting side, the e-waste recycling side, we'll be getting recycled copper. So our plan for copper is to go to 1 million, and the alumina as well, if we take the third-party specialty alumina market, we want to become among the top 3 in the world. So we will be doubling the third-party alumina market as well.
Well, that's the word coming in from Hindalco on its big capex plans. Moving on to an interesting healthcare development. Well, Eli Lilly has launched Mounjaro, which is the first of its kind obesity treatment and diabetes management drug in India. Now, my colleague Varun Dubey is here with the details of this drug.
Well, so global pharma major Eli Lilly has finally launched its much awaited drug Mounjaro in Indian markets. Now, it is the first of its kind drug used for the treatment of type 2 diabetes and also obesity. It's going to be a weekly injection for obesity and type 2 diabetes, and the pricing for this is going to be 3,500 rupees for 2.5 mg vial and also 4,375 rupees for 5 mg vial. So the monthly expense would go around 14,000 to 17,500. Now if you look at the pricing in the US market for this drug, it is around 86,000 to 1 lakh rupees on a monthly basis if you look in rupee terms. So this drug is available in the US and European market, and the results for these drugs were very good, and the demand for this drug in the US and European markets are very high. This drug comes under the GLP-1 category, and if you look overall globally, Novo Nordisk and also Eli Lilly have launched this drug globally with a sales of around $40 billion so far, and this category is expected to go up to $142 billion till 2030. So there is a large scope for this drug globally. If you look at India, India has more than 100 million people who are suffering from diabetes and obesity. So it will be a big relief for people who actually needed this drug, especially the people who are suffering with diabetes and also obesity.
Lots of scope as far as this drug is concerned, but let's move on, get you some updates as far as Deal Street is concerned. Bain Capital in definitive agreements to acquire joint control in Manappuram Finance. In fact, Bain Capital is going to be investing 4,385 crore rupees to acquire an 18% stake via preferential allotment of equity as well as warrants. Anurag Joshi standing by on the phone line with some more details. Anurag, take us to the contours of this deal then.
Bain Capital has signed definitive agreements to acquire a stake in Manappuram Finance. Manappuram Finance is a Kerala-based non-banking financial company, and one of the key businesses Manappuram today is in gold financing. Bain is investing 4,400 crore rupees to acquire the stake in Manappuram, and initially this will be an 18% equity stake, but would vary between 18% to about 42%. Now, after the acquisition of the 18% equity stake, the promoters of the company will be keeping about 28% equity stake, and the promoters are led by VP Nandakumar, who is the managing director of the company currently. The deal, the investment is at 236 rupees per share, and this will be followed by an open offer by Bain Capital to acquire additional 26% in the company, and that open offer will also be at 236 rupees a share.
Well, that was the latest on Bain Capital's stake in Manappuram Finance. Now turning to the other big development here in the e-commerce space. The giants of the industry are under the lens, it seems. The BIS, that is the Bureau of Indian Standards, has cracked down on some non-certified goods with these companies. The regulators are really turning up the heat on these e-commerce giants. In fact, a two-team squad from the Bureau of Indian Standards raided Amazon and Flipkart warehouses on March 19th. And from what we've learned, they've seized non-certified products that fail to meet compliance norms. My colleague Sameer Dikshit had filed this report earlier. Let's get the details.
So basically, the BIS, Bureau of Indian Standards, the government agency, has been receiving inputs that the e-commerce giant, they have been selling products, they have been storing the product which are not carrying the essential BIS marks. There are certain norms flout which are being done. And based on these inputs, BIS, the two teams carried out the enforcement action. They carried out the search operation and the seizure operations at the warehouses of Amazon and Flipkart. Now this action or the entire exercise was carried out at Thiruvallur district in Tamil Nadu, and when officials reached to the warehouse, they inspected multiple items which included like the water bottles, the stainless steel, the casserole set, even the ceiling fan, toys, and there's a long list of items. A thorough inspection was done. At the Amazon warehouse, more than 3,300 items were seized by the officials of BIS, which included toys worth rupees 36 lakh, even ceiling fan, stainless steel bottle, insulated flask, and the insulated food containers. These were seized at Amazon warehouse. Similarly, at Flipkart warehouse, roughly around 400 items were seized, which included the food containers, the insulated water bottle or the flask, these all items were there, which was seized by the BIS officials. Now these items have been seized, but basically these items did not contain or carried the essential BIS mark. The proper information was not displayed. That's the major point that was raised by BIS, based on which the seizure was done. And now, as per the norms, a financial penalty of somewhere around rupees 2 lakh could be imposed on Amazon or Flipkart. Now it is to be decided by BIS, and even imprisonment is there under the action. So that will be decided and will be imposed by BIS. But now Amazon is saying that they regularly reach out to the vendors or the sellers to properly give the right information on their product. That is their answer or the response to these sort of raid that has been carried out. But this is a big action by BIS based on the inputs that the products which are being stored in these warehouses are not carrying proper BIS marks, proper standard mark, and that is a clear violation of the quality control order.
Well, absolutely. There was a thorough inspection indeed. Lots of non-certified products that were seized by the BIS. But time for a very short breather on this show. When we come back, we'll get you more news and updates on the other side. So see you then. Welcome back. You're watching Market Cafe on ET Now, and as promised, let's get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, Varun is standing by with just that list. Varun, which are the counters that make it to your list?
Good morning. So first of all, you need to keep an eye on important event, that is FTSE rejig, and this will happen after today's close, and there are several stocks which would be added, which would be deducted, weightage would be changed, and because of this, India to see a passive inflow of around 1.2 to 1.4 billion dollars. There are several stocks which would be out of F&O from 27th of May, that is a June series, and they are Apollo Tyres, Deepak Nitrate, Escorts Kubota, MRF, and the Ramco Cements. Keep an eye on different stocks because DAC has cleared capital acquisition proposals worth rupees 54,000 crores to enhance the defense capabilities. So because of this, majority of the defense counters would be in focus today. Hero MotoCorp, the company is diversifying into electric three-wheeler category, and the company has actually made strategic investment of around 525 crores in Illior Motors Private Limited. IndusInd Bank, the bank has appointed independent firm to conduct a probe to identify the root cause of the discrepancy in the derivative portfolio that has occurred a few days ago. HCC, the company has received, the company and a JV, that is Tata Projects, it's a 50-50 JV, and the company has received orders from Tata Power worth rupees 2,470 crores. Other than this, you need to keep an eye on Glenmark Pharma because the company has received ANDA approval for one of the OTC products, and the overall sales for this product in the US markets is around $50.7 million.
Thank you so much, Varun. Those were the stocks to track today. Well, it's now time for some word from the wise. ValueQuest Ravi Dharamshi believes that valuations are back below long-term averages and that the worst for the Indian market could be behind us. Take a look.
There are three buckets. One is the deep value bucket. Over there, I feel the large private sector banks, some general insurance companies, and some NBFCs and life insurance companies as well. These sectors fall under the deep value kind of opportunity. There are some sectors where there is continuing business momentum. So whether it is renewables, whether it is power transmission, these are continuing business momentum, and we continue to like that as well. And there are some new age sectors which are probably still not yet represented in the market, and which probably brings us to the private equity piece of it, is that aerospace. I think these are all new sectors being born in the market, and people yet don't know the kind of potential it holds, and that is what we will uncover some of it in our private equity investor day today.
Okay, some of the themes in the private equity investor day are aerospace, energy transmission. Now these are big boy businesses which require a lot of capex. They are dominated by large groups, and while they are exciting businesses, they are not the typical pace where private equity investors they invest in.
No, so see, you are right. The larger piece, the large system integrators or the OEMs is the big boys game. But there is a big supply chain attached to that, where there are a lot of small players which can scale up quite dramatically. and energy transition is not one sector, right? I mean, there are so many sectors associated with energy transition. Nuclear, wind, solar, biofuels, power transmission, electrification, EVs, battery storage. So there are many sectors. And since these sectors are all still evolving, there will still be investment opportunities over here. So I would say that there are enough and more small and mid-sized companies which can scale up. And yes, they will need capital at this point of time, growth capital, and that's where we come in.
Okay. The history of Indian private equity investing is somewhat khatta meetha. There are great success stories, but there are a lot of companies which never make it to the big league. How are you, and since this is public money which you would be managing, how would you ensure that the private equity fund where you're investing in, the journey is going to be a smooth one?
See, nobody can ensure a smooth journey, but what I can say is that we have tried to address a few of those concerns. So number one concern is private equity tends to be an illiquid asset, right? Your money is locked in for 10, 12-year period. We have shortened that horizon. Our products are more 5, 7-year kinds. Number two, it tends to be, if you are at the the left hand of the spectrum, which is venture capital seed, then your odds of success are very low. So we have tried to find a sweet spot in both the things and tried to bridge the gap between venture capital investing and public markets by focusing on growth stage investing, companies that are likely to go public in a 2 to 3 years time frame, and companies that need growth capital before they are ready to do IPO. So that's the sweet spot for us, where we can improve the odds of winning as well as find businesses that can scale up, which are worthy of getting listed.
This is not for the first time we are talking private equity with you. One of the success stories for ValueQuest has been Wari. Then you've also invested in Wow Momos and a couple of other startups. Which have been the super hit names for you?
So again, disclaimer, since we manage money for the public markets as well. But yeah, Varia has been one of our big winners for us on the private equity side as well as on the listed market side. And the numbers are there for everybody to see. The kind of scale change that has happened in this company. This company used to be a 70 crore PAT company in FY24. And if I were to annualize the FY25 number, they'll end up with a 1700 crore profit in FY25. That's a fantastic scale up. I mean, that kind of scale up, where are you going to get in a manufacturing business in India?
All right, then let's keep it going with commentary so that you can start your day right with commentary coming in from Market Honchos. Gautam Shah, CMT founder and chief strategist, Goldilocks Premium Research, has a positive outlook when it comes to financials, metals, and even the PSU basket in the current market scenario. In fact, among financials, he's betting big when it comes to NBFCs. Let's go across and listen in to his market outlook then.
Ask somebody who is committed into IndusInd Bank or an RBL Bank or a Bandhan, or for that matter, even a Kotak in the last couple of years, there has been gross underperformance. Whereas somebody who has been committed only into an SDFC, ICICI and SBI would not have felt the correction of the last 5 months. And that's my focus area. I want to stick to the big boys. I want to stick to quality. I want to stick to relative strength. And I'm still not tempted to buy any of the underperformers despite the fall of about 20 to 40%. I think I'm very comfortable with SDFC, ICICI and SBI. And I think these three stocks can deliver upwards of 20% over the next 12 to 15 months. They've handled the market weakness really well. Any market stability from here, possibly April onwards, I think they will be the star performer. And SBI, I think at current levels of 700, 720 has been my long-time favorite. I do see that stock, inching towards a level of 1,000 if you have to take a 12 to 18 months view.
That's quite interesting. Other than that, Gautam, what do you feel about a Bajaj Finance, a Chola, a Shriram? Because, much like the consensus playing out in banks, people are pretty bullish on NBFCs too.
Yeah, I think I've been super bullish on NBFC for the last 4 to 5 months. In our big picture report, we specifically highlighted the custom index of the NBFC space. We like the entire basket. In fact, Bajaj Finance has been on our radar for a while now. And I do see them doing, very, very good things over the next 12 to 18 months. So within financial services, the top pocket that we like is NBFCs. I think the valuations are very comfortable there. The visibility of earnings is there. And the charts have beautifully set up in the last couple of months. So the entire NBFC space, Bajaj Finance, Finserv, Shriram Finance, Chola, Sundaram, M&M, L&T Finance, all have very good charts. And it's looking like a new mega trend for the next 12 to 18 months.
But Gautam, power as a space, that is looking interesting indeed, though on the fundamental side, we have been talking about the rise in the power demand and how some of these companies are now gearing up, and even the prices are seen to be stable at this point. But technically, what is your take within the power space? Which are the stocks that you are liking at this point in time?
Just because stock markets have corrected so much and everybody seems to be very pessimistic, it doesn't mean that the India story has gone away. I do believe that the structural India story is very much intact. We might have patches of underperformance. We could even have a bear market for a year, but that doesn't change the overall structure of our bull market. We've had a great rally in the last 2.5 years. If you have to digest that for about 6 to 8 months, you can't say that India has gone off track. Keeping the India structural story intact, I think power, infra, and real estate are three pockets which I think will do exceedingly well. And these are themes that are here to stay. And after this recent correction, we do like the top three power stocks. I think they're going to outperform, and this is a great opportunity to buy into them. Similarly, I think the infra story is not going away. I think we've had great news flow in the last few months from the government side. So I believe infra will also pick up from a top stock perspective. And real estate is a mega story. We've had multi-bagger returns in that space, some correction in the last 5 months, but I think all the 4-5 top stocks are now ready for the next wave on the upside.
2024 has been a great year from some of these platform companies. I'm not sure whether you track these companies very closely, but just on the technical front, do you believe that now is the time to maybe start looking into some of these high beta names, case in point being Zomato, Paytm, even for a matter PB Fintech, or even say Dixon? What's your take on these companies? Any stock that looks very interesting to you at this point?
See, there are landmines everywhere and you need to be very careful. We've seen so many of these platform companies correct so much in the last 5 months that sometimes you want to give up on the fundamentals when you see the price action. Yes, there is no doubt that some of these new age platform companies will do very well from a 3 to 5 year perspective. And I think Zomato and Cartrade have been on top of our list, and possibly a Nazara Tech, which I think is very, very interesting at today's prices. But aside of these three, I would be a little wary, because I think after the correction of the last 5 months, many value stocks offer much better risk reward and margin of safety. So why would I be adventurous in getting into some of these platform companies where the entire data or the earnings is on the Excel sheet and you might not see it, given all that's happening in the country right now and the slowdown and whether the pickup at all is going to happen in the next couple of quarters, we do not know. So key point is risk reward not in your favor, but don't ignore them. I think there are a few names, couple of names I gave you, which I think can stand out.
Well, that was Gautam Shah's outlook on the market. With that, it's now time for more news and updates. Stay tuned with ET Now.
If you like this video, then like, share and subscribe to ET Now.